Hi, this is Patrick here from the Facebook group and social media platform for all PAYE workers and their employers to ask and get answers to their questions. The group is called Payroll Matters in Ireland and new members are always welcome. Today I want to talk to you about the taxation of maternity benefit. I have noticed that the average watch time of some of my recent material is about 4 minutes. I can tell you now that if you are not intending to watch this video to the end, then my advice to you is to hit that pause button straight away and move on until you have time to return to watch it to the end, because the answers to all the frequently asked questions are addressed throughout the whole video and you really don't want to miss out on one you are specifically interested in or an item that you didn't even know that may be of interest to you, or indeed some other juicy tips. Taxation of maternity benefit. Maternity benefit is liable to income tax. These payments are not liable to Universal Social Charge, USC, or pay-related social insurance, PRSI. On this post, we will be dealing mainly with the tax implications, but we will include USC and PRSI comparisons. We will be using practical, real-to-life, worked-out examples to demonstrate the process and the effect on net pay before, during and after the maternity leave and on the return to work. In summary, the Department of Social Protection, the DSP, gives revenue details of maternity benefit payments. If you receive maternity benefit and you are a PAYE earner, taxpayer, revenue collects the tax revenue. Revenue will reduce your annual tax credits and rate bands to collect any tax due on a weekly basis from your maternity benefit. To do this, they annualise the weekly amount of maternity benefit. A notional annualised amount is calculated by multiplying the weekly amount by 52. Your annual tax credits and rate bands are reduced by this amount. The maternity benefit tax credit certificate received is on a week 1 basis. This means that the adjusted tax credits and rate bands are applied on a week-by-week basis. You can see this on your tax credit certificate, your TCC, in your documents on Revenue My Account. It looks like this. Don't worry about the details of it now, as I will look at those in more depth in just a moment. If you don't know how or where to locate it, we have a video on our channel here called My Account Overview. How to navigate the self-service options available on My Account to help you. Revenue will make a revised payroll notification available to your employer with the details of your revised tax credit certificate. The weekly adjusted tax credit and rate band apply for the duration of the maternity benefit payments only. They are adjusted after the last payment is received from the Department of Social Protection. However, Revenue's real-time tax credit and tax band reduction can cause people returning to work after maternity leave to be overtaxed, because we live in the real world and unfortunately in many cases there can be a significant delay with the DSP notifications to revenue and revenue notifications to employers. Any delay in issuing the correct tax credit certificate to women after returning to work results in them paying more tax over and above what they should have paid for every week of delay in the notification of the correct certificate. Worked out examples. The examples we will show are how tax credits and bands are adjusted by revenue to account for maternity benefit. For illustration purposes, these examples are based on women who are separately assessed with the tax credits and tax bands related to those of a single person. This is a sample of the tax credit cert issued to our sample maternity leave applicant for 2024 prior to going on maternity benefit from the 11th of May 2024. That is their tax credit that they were issued with at the beginning of the year. Employees are entitled to a single personal tax credit of €1,875 in 2024 and an employee tax credit of €1,875 in 2024, which brings the total to €3,750. Their standard rate cut-off point is the amount of their personal standard rate tax band. This is €42,000 per annum for a separately assessed PAYE worker in 2024 as we are using in our example. For each pay period, they pay tax at the standard rate of tax, 20% up to their standard rate cut-off point. Any income over the standard rate cut-off point is taxed at the higher rate of 40%. When the total amount of tax has been calculated, their tax credits are subtracted from this figure to give the total amount of tax owed. Pay before the start of maternity benefit. For illustration purposes, the example we will use here is the person who earned €650 per week prior to going on maternity leave, with annual tax credits of €3,750 and a standard rate band of €42,000 per annum. These figures are derived from our tax, PAYE and USC current pay, or this pay period calculator. It is called the 2024 Net Take-Home Pay Calculator. Maternity benefit is paid to women for 26 weeks who are PAYE employees and satisfy the pay-related social insurance PAYE contributions and some other conditions. The standard maternity benefit rate is €274 per week from January 2024. So if you qualify for the standard payment, you will be paid €7,124 of maternity benefit in total. In this example, we assume the person qualifies for the standard rate of maternity benefit of €274 from the date she commenced a maternity leave on the 11th of May 2024. Revenue will reduce Anne's tax credits and weekly standard rate cut-off point to account for the tax due to be payable on her maternity benefit. The annualised reductions tax rate band €274 multiplied by 52 is equal to €14,248, and the tax credits €274 multiplied by 52 multiplied by 20%, or 1/5, to account for the tax credits, which equates to €2,849.60. When Anne commences maternity benefit, Revenue will issue her with a new cert. Anne's revised tax cert will look like this. In Anne's case, her full wages are paid for by her employer, and the employer receives the maternity benefit directly from the DSP. This is a comparison of pay before and during maternity leave. Some employers will continue to pay their employees on maternity leave and request that your maternity benefit be paid to them. You should check your contract of employment to see what applies to you. Example where you receive full wage from your employer while on maternity leave, and maternity benefit is paid directly to your employer from the Department of Social Protection, the DSP. The difference between the wage paid to you by your employer and the maternity benefit paid to your employer is subject to income tax, USC and PRSI. Just to break that down into understandable pieces with an example. Your employer receives €274 that you are entitled to as maternity benefit. Your normal weekly wage is €650, so the difference is €376. The €376 is subject to tax, PRSI and USC, but the €274 is only subject to income tax, which is collected through the reduction in rate band and tax credits. Example 1. Anne is paid her full salary while on maternity leave. She receives taxable pay of €376 per week, and maternity benefit of €274 per week is paid directly by the Department of Social Protection to Anne's employer. Revenue will receive the maternity benefit details directly from the DSP. They will reduce Anne's annual tax credits and rate band by the maternity benefit amount and send a revised tax credit certificate to her employer. Anne's revised weekly rate band will be €533.69 and her weekly tax credits will be €17.32. Anne's weekly salary while she is on maternity leave is made up of the figures contained in this table derived from our net pay calculator. The company salary proportion €376 has tax, USC and PRSI deducted by the employer. The tax payable on the maternity benefit portion, the €274, is collected by the reduction in Anne's tax credits and rate band. As we have already said, maternity benefit is not chargeable to USC or PRSI. The net result is exactly the same, where the employee receives the maternity benefit themselves directly from the DSP, and the employer tops up their wages to make up the difference. This is referred to as top-up wage and maternity benefit received by employee. When you compare the before maternity pay and the during maternity leave, here is the comparison. When Anne goes on maternity leave and starts getting maternity benefit, she is no longer liable to pay the universal social charge or PAYE, since these are not charged on maternity benefit. Hence, the reason for the net take-home pay is greater while on maternity leave. As you can see here, is the maternity benefit is not liable for USC or PAYE. There are some companies who reduce the amount of what they top up so as to equate the net pay while working before the maternity leave with the net pay while on maternity leave. In these cases, the net while on maternity leave, for our example, would be €552.72. Example 2. Only maternity benefit is received and no wages are paid. Mary is not paid any top-up by her employer while she is on maternity leave. Her maternity benefit is paid directly to her while she is on leave. Mary is not paid by her employer while on maternity leave, so the following applies. Mary earned €650 per week before she commenced maternity leave on the 11th of May 2024. She paid tax, PAYE and universal social charge weekly. So up to the 11th of May, prior to that going on maternity leave, Mary and Anne were in exactly the same position. This is Anne and Mary's tax cert and weekly payments before maternity leave. When Mary and Anne commence maternity leave, the tax payable on the maternity benefit of €274 is collected by the reduction in their tax credits and rate band. Revenue issue a revised tax credit cert as follows in both their cases. The revised revenue payroll notification, or RPN, is available to Mary's employer on a week one basis, even though it is not applicable to Mary in her job, as she is not on the payroll while on maternity leave. Mary and Anne returned from maternity leave on the 11th of November 2024, as they work from Monday to Friday and are off on Saturday and Sunday. Pay on returning to work after maternity leave. In November 2024, the DSP informs Revenue that Anne and Mary's maternity leave payments have stopped. Revenue adjusts their tax credits and rate band by removing the maternity benefit. Revenue send revised RPNs on a week one basis to Anne and Mary's employers. They show the following tax credits and rate bands from the 9th of November 2024. The annual tax credits of €3,750 are equal to a weekly tax credit of €72.12. The rate band of up to €42,000 per annum is taxed at 20% and the balance is at 40%. So, up to €807.70 per week will be taxed at 20% and the balance at 40%. A week one basis means that Anne and Mary's employers are to apply the tax credits and rate bands on a week-by-week basis. This is not backdated to the 1st of January 2024. Anne and Mary returned from maternity leave on Monday, the 11th of November 2024. The first pay date is on the 22nd of November. Their gross pay is €650 and their employers calculate their weekly income tax as follows. Anne and Mary's weekly income tax payable from the 11th of November is taxed at 20% of €650, which is €130. And there is no income tax at 40%. The gross tax thus is €130. Deduct the tax credits of €72, so the tax payable is €57.88. As Anne and Mary's income is covered by their standard rate band, they do not pay tax at the higher rate of 40% on any of their income. Anne and Mary's gross pay of €650 is also subject to USC and PAYE as normal. Mary was not paid by her employer during her maternity leave and her tax credits exceed the tax due on her maternity benefit. A tax refund and a refund of universal social charge may be due to Mary and she should submit an online income tax return at the end of the year through her Revenue My account. As the RPN issue to Mary is on a week one basis, her employer cannot make any refund due. Mary can also contact her revenue office to see if they can remove the week one basis and only reduce her tax credits and rate band to take account of the maternity benefit she was actually paid. €274 per week multiplied by 26 weeks is equal to €7,124. So the reduction into 20% rate of €7,124 and tax credits by 1/5 of that, which is equal to €1,424.80 for the year. Anne and Mary might still be on a week one basis at the end of the year. If so, they should submit an income tax return available in the PAYE service in My Account, and Revenue will review their tax position. Issues that may arise during this taxation process. In the case where you receive a top-up from your employer, any one of the combination of any of the following will result in the person going on maternity leave to underpay tax for a period of time while on maternity leave because of not having your tax credits and rate band reduced. A delay in submitting your claim for maternity leave, a delay in the DSP advising Revenue that you commenced maternity benefit, a delay in Revenue notifying your employer of the revised tax credits due on the maternity benefit. You should apply for maternity benefit at least 6 weeks before you plan to go on maternity leave. Maternity benefit payment starts from the first week it is claimed. It is provided for 26 weeks of the maternity leave and is made each week in advance, excluding Sundays. It is a 6-day-a-week payment, and payment is made on a Monday. If your maternity leave starts on any day other than a Monday, your first payment will reflect this and you will get a reduced amount of payment for that week because your payment is only for a part of a week. Because the pay cycles of weekly, fortnightly, monthly, etc. vary between employers, and because your wages may be paid current or in arrears, the timing of the implementation of the revised tax cert may not always coincide with the implementation of your employer's top-up. As a result, you may underpay or overpay tax you will see in PSI at the beginning of your maternity leave for a week or two, even 3 weeks. Any underpayment or overpayment will fall due to be paid by you or to you on your statement of liability when you complete your tax return at the end of the year. For the same reason as outlined above, you may underpay or overpay tax you will see in PSI at the end of your maternity leave for a week or even 2 or 3 weeks after you return to work. If the DSP informed Revenue in real time and there were no delays in processing the revised RPNs, and if the pay cycles were the same and we lived in a perfect world, then Anne's tax would be balanced. However, in the real world, payroll time periods and DSP periods are not always in sync, and there may be delays in the information passing from the DSP to Revenue and from Revenue to Anne's employer, in which case a tax underpayment or overpayment may occur, in which case Anne should submit an online income tax return at the end of the year through her Revenue My Account. And difficulties with the process for the taxation of social welfare benefits. Because we live in the real world, unfortunately, in many cases there can be a significant delay with the DSP notifications to Revenue and Revenue notifications to employers. When there is any delay in issuing the correct tax credit cert after Mary or Anne returns to work would result in Mary and Anne paying an overpayment of €78.07 per week over and above what they would have paid for every week of delay in notification of the correct certificate. The €78.07 is the difference between €552.72 and €474.65, and the difference between the tax payable of €57.88 and €135.95. Maternity benefit claims that span over 2 tax years. You may be on maternity leave that spans 2 tax years, for example, from September one year to February the next year. Maternity benefit payable in year 1 is taxed by reducing the tax credits and rate band in accordance with the annualised process on a week 1 basis, as we dealt with earlier. For each week In this example, the employee is better off by €28.30. Maternity benefit payable in year 2 is taxed by reducing the tax credits and rate band. Revenue do this on a cumulative basis from the beginning of the year 2. This means that revenue spread the tax due on the maternity benefit for year 2 over the full tax year. To do this, they must know from the DSP the amount of maternity benefit due to be paid in the second year. Couples taxed under joint assessment. For illustration purposes, in the examples we use PAYE workers who are taxed separately. In some instances where tax bands and credits are divided under joint assessment, you may not have enough tax credits and rate band to allow the collection of the full amount of tax due. Revenue will collect the balance by reducing your spouse's or civil partner's tax credits and rate bands. On the Facebook group Payroll Matters in Ireland, we always advise our members not to transfer tax credits to their spouses or civil partners when they are going on maternity leave, because it is not a straightforward process and usually ends up making a mess of tax credits and tax bands when they are returning to work following maternity leave. I hope this guide has gone some way in helping you understand why, in some cases, it is inevitable that women returning to work following maternity leave will be overtaxed. The process is very complex and difficult for most people to get their head around. For assurance to determine whether you have been overtaxed or undertaxed following your maternity leave, you can check the cumulative tax and USC figures on your payslip against our calculator here called Year-to-Date Cumulative Income Tax and Universal Social Charge USC calculator. Please consider liking this video or subscribing to our channel if you have not already done so, in order to keep up to date with Payroll Matters in Ireland and to help us continue making helpful videos like this one. Don't forget that you can also join the Facebook group Payroll Matters in Ireland if you are not already a member. Thank you to everyone that has already hit this subscribe button. And thank you for watching, and I will see you next time.